The market is a strange animal. It looks complicated when you first come to it, but it's really the same thing dressed in a different suit, decade after decade. People come in thinking they'll find some secret formula, some hidden code, some machine that'll give them tomorrow's price today. But there's no such thing. What there is, what's always been there, is the rhythm of the thing, the waves. And if you can learn to see them before the crowd does, you've got yourself an edge. Not a permanent one, not a guaranteed one, but enough to make your fortune if you've got the nerve to act on it. Tell me, do you believe you can sit still long enough to see it unfold? Most traders, they're busy chasing ticks. A nickel here, a dime there. They're staring so close at the tree bark, they never notice the forest fire behind them. I learned early that the big money isn't in catching every little jiggle, every flicker on the tape. It's in catching the big wave, the long swing. That's the difference between a gambler and a speculator. A gambler bets on noise. A speculator waits for the music. Now, have you ever asked yourself, honestly, which one you've been so far? The trick to spotting the wave before it rises is simple in theory, but devilish in practice. You've got to listen to the market itself, not the opinions, not the newspapers, not your broker whispering sweet nothings about a sure thing. The market speaks plain enough if you're willing to quiet your own chatter. Prices don't move without cause, and they don't keep moving without reason. When a stock acts stronger than the general market, or weaker when the market rallies, that's the market whispering to you. Do you lean in close enough to hear it? The tape never lies. Men lie, newspapers lie, tipsters lie. The tape tells you the truth every second of the day. It's the only honest thing on Wall Street. But the truth isn't always obvious. It's buried in the behavior. It's in how a stock acts under pressure. When bad news comes and it refuses to go down, that's strength. When good news comes and it can't rally, that's weakness. Most traders ignore those little signs because they're too impatient. They're itching for action. They think doing something is the same as making progress. Isn't that how you feel sometimes, itching to be in the market, even when nothing's ripe? Patience is what separates the survivors from the wrecks. You can study every chart, every price history, every bit of gossip on the street, but if you can't sit tight, it's all wasted. I made my biggest money not by trading, but by sitting. I waited until I was sure the wave was forming, then I rode it until the market itself told me it was done. Every amateur wants to buy at the bottom and sell at the top. That's a fool's errand. You won't get the bottom, and you won't get the top. But you can get the middle, and the middle is where the money is. Isn't that better than chasing ghosts? Think about a tide coming in. The first little waves aren't much, just ripples. Then a bigger swell follows and another after that. Before long, the water is high up the beach, and everyone can see the tide is in. But the man who noticed those first small swells, he's already positioned. He didn't need a bell to ring. He saw the water creeping higher before the crowd even realized it. That's how the market works. The early movement, the subtle strength or weakness, that's the start of the wave. Don't you want to be the man who sees it before everyone else? Most traders can't believe what they see unless 100 others are already shouting about it. They need confirmation, they need to be told, they need permission to act. By the time they get that, the move is half over. The easy money is gone. The trick is to act when the evidence is enough for you, not for the crowd. The market rewards the man who can trust his own judgment, provided that judgment comes from observation and experience, not from hope or greed. Do you trust your own eye, or are you still waiting for the crowd to nod? Now, don't mistake me. I don't mean guessing. Guessing is ruinous. I mean studying the market, watching the way it behaves, learning its habits like you'd learn the habits of a man you're dealing with. Every stock has a character, and the whole market has a temperament. You have to study them both. You learn that when a stock leads the market higher, when it refuses to break under selling pressure, when volume shows buyers stepping in quietly, that's no accident, that's accumulation. That's the insiders and the strong hands getting aboard before the crowd. Haven't you noticed sometimes how a stock, just feels heavy or feels buoyant. That's no accident either. When I was a boy in the bucket shops, I didn't have the news, I didn't have inside tips. All I had was the tape. And the tape was enough. I'd noticed that a stock would hit a certain price and then stall. Or it would break past a number and keep going like it had been unchained. That's how I learned the market waves, by watching the action, not by listening to chatter. The chatter only came after the move was half over. Don't you see? By the time it's in the papers, it's too late. Let me tell you, fear and greed never change. They were the same in my day as they are now, and they'll be the same 100 years from now. Those two emotions are what make the waves rise and fall. A stock doesn't go up because some fellow in an office says it should. It goes up because enough people are greedy enough to buy it at higher and higher prices. It goes down because they get scared and dump it. If you can see where greed is just starting to heat up, or fear is just starting to creep in, then you're ahead of the pack. Can you train your eyes to see what people are feeling before they admit it to themselves? The early signs are always there, hiding in plain sight. A stock that shrugs off bad news. A general market that won't rally no matter how much cheerleading you hear. That's the tide turning, the swell beginning to form. But most traders won't act because they don't trust what they see unless it's confirmed by somebody else. And the crowd always comes late. That's why the crowd always loses. Don't you think it's time you stop being part of the crowd? What a trader really needs is the ability to sit quietly with his own thoughts and his own observations. It's lonely work. There's no cheering section for the early bird. When you're buying a stock that nobody else cares about, you'll feel like a fool. When you're selling one that everyone's still raving about, you'll feel like a traitor. But those are the trades that pay. The ones where you act before the wave is obvious. Do you have the backbone to look foolish in the short run, so you can be right in the long run? You see, spotting market waves early isn't about charts or formulas. It's about human nature. Human nature doesn't change. The same old tricks, the same old habits they keep playing out, just with different names, different tickers. Once you learn to recognize them, it's like recognizing an old acquaintance in a crowd. You can spot them a mile away. A stock being quietly accumulated looks today the same way it looked 50 years ago. A panic sell-off today smells just like one did in 1907. Haven't you noticed how the stories change but the behavior repeats? The real difficulty isn't spotting the signs. It's acting on them. Most traders see the same things but won't act, because acting means risk, and risk means fear. They'd rather wait until the whole street is talking about it, which means they're already late. The market doesn't pay you for knowing, it pays you for acting. And not just acting once, but sitting tight while the wave carries you along. Do you think you can sit there with your profits untouched while the world screams at you to take them? Every great move I ever caught, I caught by waiting until I was sure the wave had begun, then getting in and staying in. The money wasn't in being clever. It was in being disciplined. Any fool can buy a stock. Any fool can sell one. The trick is to wait for the right moment, and then to have the guts to hold on. That's the part most men can't do. They want to snatch at small profits. They want to get rich quick. They want to be constantly busy. The market doesn't reward business. It rewards patience. Do you have the patience to do nothing most of the time? What happens is this: a wave begins subtle at first. A stock trades in a narrow range, then starts to edge higher. Volume picks up a little. It doesn't look like much. The amateurs ignore it. But the professionals, they're getting aboard. Then the move becomes more visible. The amateurs notice, but they hesitate. Then the newspapers start writing about it. Now the crowd piles in. By the time the wave is crashing on the shore, everyone can see it. But by then, the professionals are selling to the crowd, and the amateurs are left holding the bag. Haven't you seen this play out before? Again and again. The hardest thing in this business is to know when the wave has run its course. It's never neat, never clean. There are always little rallies in a decline, little dips in a rise. The amateurs mistake every wiggle for a change in trend. They're forever jumping in and out, But the real move lasts longer than you think it will. It carries further than you expect. That's why sitting tight is so hard. The market will tempt you every day to snatch at crumbs when there's a feast still on the table. Can you resist that temptation? When I study a market, I'm not looking for tips. I'm not looking for noise. I'm looking for behavior. I'm looking for strength when there ought to be weakness. Weakness when there ought to be strength. That's the tell. That's the wave forming. It's no different from a poker game when a man bets differently than the cards on the table suggest. You know he's holding something. The market's the same. Do you see how every trade, every tick, is like a bet someone is making with real money? The market doesn't care about your opinion, my opinion, or anyone else's. It doesn't care about your hopes or your fears. It moves on the weight of money, on the balance of fear and greed. When that balance shifts, the wave starts. The trick is to notice the shift before the rest of the crowd. That's all there is to it. But to do that, you've got to forget your own ego. You've got to be willing to admit you're wrong quickly and move on. Pride is expensive in this business. Haven't you noticed that your biggest losses come when you were too proud to cut and run? I never argued with the tape. If the tape told me I was wrong, I got out. No excuses, no explanations. The market doesn't owe you an explanation. It owes you nothing. The only thing it offers is opportunity, if you're willing to see it and act on it. Most men miss it, because they're too busy defending their own opinions. The wave doesn't care what you think it should do. It does what it does. Do you have the humility to follow it instead of fighting it? That's why I always said the big money is made in the big swings. Not in trying to scalp a point here and there. The little movements will eat you alive with commissions and mistakes. The big waves, those are what pay, and they don't come every day or every week. They come when they come, and your job is to be ready, to recognize them, to act, and to sit. Isn't that simpler than wearing yourself out on every little jiggle? And let me tell you, the longer you're in this game, the more you realize it's not a game of brains, it's a game of character. Any fool with a pencil can see when a stock is moving. What matters is whether you've got the nerve to act and the patience to hold. Character, that's what makes the difference. The market exposes your weaknesses. If you're greedy, it'll punish you. If you're fearful, it'll punish you. If you're impatient, it'll punish you. It's a perfect judge. Do you know what part of your own character costs you the most money? The trick to spotting the market waves early isn't a trick at all. It's just work. Observation, patience, discipline. You watch, you learn, you wait, you act, and you sit, over and over again. It's dull, it's lonely, it's hard. That's why so few succeed at it. They're too eager for excitement, too afraid of boredom, too weak to wait. But the market rewards those who can. Will you be one of them, or will you keep chasing thrills? Character. That's the word that separates the winners from the losers in this business. Not intelligence, not education, not connections. I've seen bright fellows with all the brains in the world lose everything, and I've seen men who could barely read a balance sheet build fortunes. Because they had character, and in speculation, character means discipline, humility, and endurance. Do you ever stop and ask yourself if you've really got those three, or if you just think you do when the market isn't testing you? Discipline is the foundation. Without it, nothing else matters. Discipline means you obey your rules even when it feels painful. It means you cut your losses when the tape tells you to, not when your pride finally gives up. Most traders know the rule: cut losses quick, let profits run, but very few live by it. The moment the market turns against them, they start inventing excuses. It'll come back. It's just temporary. I'll give it another point. That's not discipline. That's hope dressed up as reason. The market doesn't reward hope, it rewards discipline. And yet how many times have you broken your own rule, convincing yourself that this one was different? Humility is another part of character, and maybe the hardest for most men. The market humbles everyone eventually, but the wise man learns to humble himself before it's too late. To be humble means to admit when you're wrong without delay, without shame. Wrong trades are part of the game, not a stain on your reputation. But most traders can't stand the thought of being wrong, so they hold on, they argue with the tape, they let pride dig their grave. I never argued with the market. If it told me I was wrong, I got out. Quick, no explanations, no excuses. Have you ever noticed how much money pride has cost you? Endurance, that's the final test of character. It's the patience to wait through the dull times, the self-control to do nothing when nothing should be done. Most traders think the game is about constant action, but the truth is the real money comes in waiting. You wait for the right setup, you wait for the wave to form, you wait while it carries you. And you also wait through the long dry spells when the market gives you no clear signal. That's when most men lose their money, nibbling at little trades out of boredom. They can't endure inactivity. They'd rather lose money than sit still. Do you have the stamina to stay idle when the market offers you nothing? Character shows itself in the heat of the moment. It's easy to be disciplined in theory, humble in conversation, patient in words. But when the ticker is moving against you, when your profits are begging to be taken too soon, when your account is shrinking by the minute, that's when your real self shows. Do you follow your rules then, or do you panic? Do you admit the market's right and you're wrong, or do you fight it? Do you stay in the position you studied and believed in, or do you snatch at crumbs? That's character, and the market never fails to put you to the test. I've often said the big money isn't in thinking, it's in sitting. But sitting requires endurance of the highest kind. You sit while the market tries to shake you out. You sit while the newsmen stir up fear. You sit while your friends laugh at you for holding a position that looks foolish. To keep sitting in the face of all that takes steel in your spine? Anyone can buy. Anyone can sell. But can you sit when your profits are big and growing, with every instinct telling you to grab them? That's character. How many times have you cut short a great move because you couldn't sit still any longer? Discipline, humility, endurance, they sound simple, but they're the hardest things in the world when money is on the line. You can read every book, study every chart, know every theory, but without character you'll still fail. The market is a perfect mirror. It shows you exactly who you are. If you're greedy, you'll see greed staring back at you in your losses. If you're arrogant, you'll see arrogance in your failures. If you're impatient, the tape will make sure you pay for it. Have you ever looked back on a losing streak and realized the common thread wasn't the market, but your own lack of character? I've watched men come and go on Wall Street. The ones with character survived. The ones without it didn't last long. They might have had lucky streaks. They might have caught a wave or two, but sooner or later the market exposed them. Because this business is relentless. It doesn't forgive weakness. One lapse of discipline, one moment of pride, one bout of impatience, that's all it takes to wipe out months of work. And yet, the man with character can weather storms, can recover from losses, can keep going when the weak fall aside. Which one are you? Think about humility again. It doesn't mean you're timid. It doesn't mean you're afraid to act. It means you respect the market enough to follow it, not fight it. It means you never believe you're bigger than the trend. A man who thinks he can outwit the market is already beaten. The humble trader doesn't need to be smarter than everyone else. He just needs to recognize when he's wrong and step aside. That's how you live to fight another day. Isn't that a better way to play than going down with your pride intact and your account empty? And what about endurance? The market loves to test endurance more than anything else. It'll hand you false starts, shakeouts, dull stretches, temptations to grab at tiny profits. Over and over it'll try to push you off the right course. Only the man with endurance stays the path. He doesn't jump at shadows. He doesn't let boredom or fear drive him. He holds steady. The amateurs wear themselves out chasing every ripple. The professional saves his strength for the wave. Can you hold steady when the market taunts you with distractions? Discipline is the daily practice. Every trade is a chance to prove it or break it. You'll never perfect it once and for all. Each new move, each new temptation, is another test. That's why character isn't a thing you claim once. It's a thing you prove every day. You can't buy it. You can't fake it. You can only build it through practice and pain. Every mistake, every lesson, those are the bricks that build your character. But only if you learn from them. Have you been learning, or have you been repeating the same costly habits? The longer you trade, the clearer it becomes speculation is less about the market and more about yourself. The market doesn't change. Human nature doesn't change. What changes is your ability to master your own weaknesses. That's character. Every wave you spot, every profit you make, every loss you cut, it's all a reflection of who you are under pressure. The tape isn't your enemy or your friend. It's just a test, and your answers show up in your account balance. Isn't it plain that the battle is really with yourself, not with the market? The market rewards observation and punishes ego. That's the truth of it, plain and simple. Men lose fortunes, not because they can't see what's happening, but because they won't believe what they see. They let their ego whisper in their ear, telling them they know better than the tape, better than the trend, better than the law of supply and demand. That whisper has ruined more traders than panic or greed combined. And yet, the market keeps offering chances to those who are willing to observe quietly, patiently, without letting their ego interfere. Do you watch with clear eyes, or do you let your pride blur the picture? Observation in speculation isn't just glancing at a price chart or reading the paper. It's deeper than that. It's watching how a stock behaves when it's supposed to act a certain way and doesn't. It's noticing that the general market is rising, but one particular issue refuses to join the party. It's seeing how volume builds in silence, how orders get absorbed, how reactions shrink when selling should be heavy. The tape is a story, and every tick is a word in that story. But you can't read it if your mind is already busy telling its own story. How often have you missed the real action because you were too sure of your own opinion? Ego wants to predict. It wants to say, I knew it all along. But the market doesn't care what you knew or thought you knew. Ego makes a man marry his opinions. He'll cling to a losing position because admitting the market is right feels like an insult to his intelligence. He'll refuse to sell because selling means confessing he was wrong. The tape doesn't punish him for being wrong, it punishes him for refusing to admit it. If he could just step aside, he'd live to trade another day, but his ego keeps him nailed to the cross. Haven't you done the same, staying in a stock long after the market told you to get out? Just because you couldn't bear to be wrong. Observation requires humility. You have to accept what the market is showing you without judgment, without trying to force it into your narrative. A stock acting strong in the face of weakness is telling you something. A market failing to rally on good news is sending a message. The observer listens. The egotist argues. And while the observer quietly positions himself, the egotist waits for the market to confirm his opinion. By the time it doesn't, he's already lost. Isn't it strange how easy it is to see another man's mistakes, yet so hard to admit your own? The best observers train themselves to see patterns of behavior. Not mechanical patterns, not lines and shapes on a chart, but human patterns. They notice how traders react to fear, how they behave in greed, how they repeat the same mistakes again and again. Those patterns show up in prices, in volume, in reactions and rallies. To see them, you have to step back and watch without the need to be right. Observation is about patience and detachment. Ego is about urgency and pride. Which of those do you think the market rewards more? I've said it before, the tape never lies. But your mind does, all the time. It lies to protect your pride, to soothe your losses, to justify your mistakes. That's why most men lose, not because the market fooled them, but because they fooled themselves. The tape was telling the truth all along. The observers, the ones who kept their eyes open and their egos quiet, they saw it. They didn't need to predict. They didn't need to boast. They just followed what was in front of them. Don't you think your own eyes are worth more than the noise from brokers and newspapers? There's a danger in thinking observation is passive. It isn't. It's active work. It takes effort to sit quietly, to watch without rushing, to record what you see without twisting it into what you want to see. Observation means taking notes, noticing small changes, remembering how a stock behaved yesterday so you can compare it with today. It's the detective work of speculation. But ego hates that. Ego wants action. Ego wants recognition. Ego wants to be the hero who called the top or bottom. And the market punishes that vanity. How many times have you jumped into a trade because you wanted to be right, not because the tape said you were? Every great move announces itself in small ways. Accumulation leaves footprints. Distribution does too. You see it in the way a stock shrugs off bad news or the way it collapses on good news. You see it in the narrowness of declines, the persistence of rallies. Those are clues. The man who observes without ego sees them clearly. The man with ego ignores them if they don't fit his story. And the difference between those two men is the difference between profit and ruin. Aren't your own losing trades often the ones where you ignored what the market was showing you? The hardest thing for a speculator is to stay out of his own way. The market isn't your enemy. Your ego is. The tape doesn't trick you. Your opinions do. You'll find that the more you observe and the less you predict, the steadier your results become. Because you're no longer trying to bend the market to your will, you're letting the market tell you what it wants to do. That's the essence of speculation. And yet most men will never learn it, because they'd rather be right than rich. Do you want to be right, or do you want to make money? Ego thrives on excitement. Observation thrives on calm. When the market is roaring, ego pushes you to dive in without thinking. Observation waits, watches, sees where the real power lies. Ego makes you believe you've caught the start of a move, because you want it to be so. Observation notices whether the move has strength, whether it holds under pressure, whether it attracts volume. Ego blinds you, observation reveals, and the market pays the man who sees. Haven't you ever wished you'd waited just a little longer to confirm what you thought you saw? The truth is, the market offers endless lessons. Every day, every week, every year, it shows you examples of strength, weakness, greed, fear, accumulation, distribution. The lessons are there for anyone who cares to watch. But ego keeps most men blind. They look, but they don't see. They prefer to argue, to predict, to boast. The observers just keep watching, keep learning, keep adjusting. They're not trying to conquer the market, they're trying to understand it. And that's why they last. Can you imagine how different your results would be if you observed twice as much and acted half as often? Observation without ego is rare because it's dull. There's no glory in it. You don't get to say, I called the top. You just get to say, I saw what was happening and I went with it. But dull is where the money is. Ego may give you a story to tell at the bar, but observation gives you a balance sheet to brag about in private. The choice is always there, every time you sit in front of the tape. Which do you choose? A patience to sit still is more profitable than the itch to trade every fluctuation. That's the hardest lesson in this game, and the one most men never learn. Everybody comes to Wall Street thinking they've got to be in the market all the time. They believe action equals profit. They think if they're not buying or selling, they're wasting time. But the truth is the opposite. The money isn't made in constant motion, it's made in waiting. Waiting for the right moment, waiting for the real move, waiting while the market shakes out the restless ones. Do you ever feel like doing nothing makes you nervous, like you're missing out on something? That's the itch that costs fortunes. Most traders don't fail because they can't find opportunities. They fail because they can't sit on their hands when the opportunity isn't there. They nibble at little moves. They jump in on noise. They chase ripples instead of waves. Every little fluctuation tempts them. A stock ticks higher and they rush to buy. It dips and they rush to sell. Back and forth they go, wearing themselves out, paying commissions, stacking up small losses. It feels like activity, it feels like progress, but it's just destruction in disguise. Haven't you ever caught yourself trading out of boredom instead of conviction? The discipline of patience is worth more than any tip or system. It's the ability to sit quietly when the market gives you nothing, to watch prices dance and chatter without being pulled into the mess. Most men can't bear that silence. They crave the thrill of a trade, the feeling of being in. But the market doesn't pay you for thrills, it pays you for timing. And good timing only comes to the man who waits. The trader who jumps at every shadow ends up broke. The trader who waits for the clear light of a real move ends up rich. Do you want excitement, or do you want profits? Patience isn't passive. It's active control. It's like a hunter waiting in the blind, still and quiet, eyes alert, waiting for the right shot. He doesn't fire at every sound in the woods. He waits until the game steps into the open, until the shot is clean. That's how you trade. You wait until the evidence is clear, until the market confirms what you've been watching. Then you act swiftly, decisively, and you sit again. The amateurs fire at every rustle of the leaves, wasting bullets. The professionals wait. Which one do you think the market rewards? Every great fortune I made came from patience. I'd study the market. I'd see the signs of a wave forming, and I'd take my position. Then came the hard part, sitting still. The temptation to take profits too soon, the fear of losing what I had, the boredom of watching day after day it gnaws at you. That's why so few can do it.